the rest of the week. Okay. What time of year is it right now? It's in the fall. In the fall, stocks generally make a low and then they go higher into some measure of usually the last week of January, maybe the first or second week of February. And then it creates some kind of short term, intermediate term high and then starts either if it's a bearish at that point, then it starts working towards the April, May highs and then this works its way down through the summer into the fall lows. But we're in a market that is being propped up. It's primarily bullish. There's no one can argue against that. But if it's in a primary bull market, it can't trade down to a fall low like we would expect in a normal, you know, non-parabolic, bull market. So wouldn't it be suspicious to see how on one day they did a controlled demolition, just like 9/11, and then now we went up here yesterday, and now we're right here. And they used this old discount wick low, perfectly delivered there. Okay. And look at this candlesticks right here, the September 25th. What's the low? You're going to look at this price right here on my cursor right here. What's that candlestick low? 24,422.50. Okay. Over here this morning, this candlestick right here, it's low, 24,421 even. So it hits it, trades minimum one tick below it for spread aspect. But look at the reaction there off of that. And then we have this inefficiency, which I think, if I'm not mistaken, was I just messed to move that up. There we go. Here we go. This is this very reason right here. This is what I'm doing is the number one reason why I like doing pre-recorded videos because of my attention to detail. I like to have the chart look exactly like I want it. I don't like to see half a candle being shown here. So I don't like having to zoom in front of everybody while we're doing it live. But this is the inefficiency that you see on the 5-minute chart. And it trades down into it here. When we have a wick like this candlestick here and this right there, whenever it's a old inefficiency, I look at this as immediate rebalance the same way. It's immediately rebalancing because it's going right back to the top of the inefficiency, which is this candlestick's opening price here. It need not trade down to that. It's doing the same function as a candlestick to candlestick touch. Like in other words, if this candlestick's high touched this candlestick's low, that's immediate rebalance. This is the same element of immediate rebalance because it's using the inefficiencies high as the immediate rebalance. It's going right down to it then like that. And even though there's a small little gap, guess what that's telling you also? Would you want to see that close in if it's bullish? If you're bullish and you wanted to see it go higher, would you really want to see that if it touches the high of that inefficiency? Would you really want to see that completely close in based on what I've been teaching? No, you wouldn't. Why? Because it's indicating that it doesn't even want to give that discount there either. And that's exactly what I call it a signature for. Smart money sees that and it's like a flag to them. It's like a big alert. See, you look at price action indicators and things crossing over, becoming overbought, oversold, and that's a catalyst for you to make a decision, an action point for you to react and do something. Smart money doesn't have that because it's all horseshit. What it does is it knows where price goes below an old low. There's liquidity down there. They're not looking at depth of market. They're not looking at level two. They're not doing any of that shit. They know that there's liquidity down there. They're taking that liquidity, absorbing it, buying it, and then they're looking for continuation setups like these things here where it tells you it's not likely to go lower because it's leaving these portion of price action open. What's this? Relative equal highs. Right high is lower than the left. This is a strong candidate for Price wanted to run through. Same thing here. High, lower high. Big, big bulletin board, like going down the road, driving on an interstate, and you see these bulletin boards advertising gas stations, businesses. If you're in driving through New Jersey, that shithole of a state, everybody wants to sue everybody down there. I'm injured in Jersey.com. There's so many lawyers advertising in Jersey. It's unbelievable. I was telling my wife, I was like, look at this place. Like everything here is literally about suing somebody about a car accident. Did a truck driver go by too fast? Call us. We got something we can put on their ass. Yeah, it's nuts. Well, in price action, these PD arrays and the signatures they provide you is like a big billboard sign like that, advertising. This is what you should be expecting. This is what you're looking for. But everybody's looking for patterns. They're looking for individual candlestick patterns. They're creating new forms of ranges. There's no advantage to that. You want a time based candlestick because the market is driven algorithmically based on time. If you skew any information that is linked to time, you have greatly diminished your effectiveness in terms of timing the market with the process that it uses for protraction. When the market starts to run, this is this is protraction, where it just starts to escape and run. And it runs above those relative go highs here and it continues to go higher. But I want you to see how it uses this old discount wick. When price was up here, it opened and traded down through previous days low and into the new week opening gap, which is this candlestick's close and this candlestick's open. Go back to a 1 minute chart. If you're learning from this and you can see past the rant because I'm just having fun, um, give it a thumbs up and it'll encourage me to do more of them. It doesn't mean I'm going to come out here every day now, but the uh, the candlesticks bodies are respecting the high of that 5 minute inefficiency that you can't see on the 1 minute chart. See how it's all muddied up? It rallies up, and then now look what it's using here: 24,582.25 upper quadrant of this discount wick. Okay, so the 25th of September, we're trading up to and above that upper quadrant. Look real close, folks. Real close. We trade to the low of that wick on the 25th of September, right there. Nails the low of the day. ICT says he can pick the low of the market. I was doing that in Forex over and over and over again. Over and over and over again. And they were trying to say I was using a what's it called? What's it called again? It's escaping me. A rented white label server, which is apparently a real thing. But I never did that. I never had to do that. Am I using some kind of manipulation when I put it on Twitter and X before it happens and it does exactly what it's outlined in my tweet or post to the very levels immediately after I post it in the direction I said I was going to go? How many times have you seen me do it? If you were in my mentorship group that paid me, I was behind a paywall where these people would have roasted my ass in public and said, oh, he's a liar. He can't find a trade. He can't do this. He can't call the market. He can't do that. He's wrong all the time. That was never happening. I was in the high 90% bracket for years. And I had to do something with them every single day. Every single day. That's unheard of, folks. That is unheard of consistency. And these fucking clowns out there talking about he doesn't have a track record. Bitch, I will run circles around you and moonwalk on your shit just like that. Okay? I'm getting older. I'm slowing down. That's all. I ain't forgetting shit. I know how to do this. But it hits that low and stops. And then it rallies up. And it does something strange, unheard of. It climbs above the lower quadrant of that discount wick right there at 24,475 and 3/4. Take a deep breath. Ground yourself. Ready? This is how easy this stuff is. This is why it's just easy for me to go out here and to do this. And my students are learning to do this too. So it's transferable knowledge. It's not me out here talking all this shit and trying to sound powerful and I love the sound of my voice and it's all ego trip. I'm being funny. You may not like the humor I'm using, but I'm having a great fucking time with it. And I don't care if it offends you. These quadrant levels, whether they're on an inefficiency, like a fair value gap, or an actual gap in price where there's no trading at all, or it's a wick, which we treat the same way. Both of those things, I guess technically would be three things, right? No price at all is a vacuum block, which is that's a real gap. There's an inefficiency, buy side imbalance, sell side inefficiency, sell side imbalance, buy side inefficiency, SIBI, BISI. Those are fair value gaps. They're inefficiencies. And then you have the candlestick wicks. We treat them the same way. We grade them. Listen to me, listen to me, listen to me. I read these assholes on another channel today, and I love doing this. If I didn't know what I was doing, this would really break my heart and it would hurt me. It would hurt my feelings. And admittedly, I'm not trying to be funny. If I didn't know what I was doing, some of these comments would genuinely hurt my feelings. When they say fair value gaps are trash, they don't work. They don't ever work. And I'm going to tell you, young men, okay, you masters of the fine art of virginity, I'm going to tell you something right now that's going to help you. It's going to help you in your pursuit of that perfect lady that you can wine and dine and finally afford more than the fucking dollar menu at McDonald's. Here it is. You ready? Every high probability fair value gap, every fucking one of them lays on top of a quadrant that I've been teaching you since I started back here again. Look, real close. What do you see at 24,475 and 3/4? What do you see? What do you see? Ready? We went down to the low of that wick, and then it starts to go higher and pulls back to this quadrant. In your mind, okay, how's ICT going to think about this? What's the internal dialogue of ICT? What's the inner musing of ICT? Hmm? Well, if we rode this down, well, shit, then I can use an imbalance on the pathway down. That means, well, this is one right here, but is it on top that quadrant level? Mm-mm. No, Virginia, it's not. But look, look, what do you got here? Oh, look at that. We got this one right here. You see that? Well, boom, boom. Where's the consequent encroachment of that fair value gap? At the fucking perfect level on that quadrant. Is that one thing telling you? Nope. Is it all by itself? No, it's not. It's telling you that right here is that sweet spot. And you can accumulate along right there. And you need not concern yourself with this bullish breaker. If it's bullish, would it want to wait around to come back for a bullish breaker? If this is a V bottom? Nope. Rips right through it and leaves this right there. And YouTube mentors with my stuff in their mouth will say, I will really love to take a trade right here if it can come back and trade into that because it broke structure right here. That is the worst fucking bit of advice you could ever take from somebody trying to talk like me. You might have my words, you might have some of my vocabulary, but you have no idea what the fuck you're talking about. This is what you want to see when it's bullish. And here's 930 right there. Okay. Keep going forward. What do you see right there? What is that? What is that? Holy smokes! That's that shit he said. First, present the fair value gap. Oh my goodness. I already pick it up in the force. The Jedi Knight knows exactly what's going on. You're all vibrating right now. First present the fair value gap. Just happens. It just fucking happens to lay right on top of the upper quadrant of that discount wick. ICT cherry picks the perfect fucking PD arrays all the time. It's gotta be Photoshop. It's gotta be hindsight. He's gotta be using 30 fucking laptops. He's gotta be doing it. I can't fucking sleep. How is he doing it? I love it. Here is, oh man, you're gonna fucking love these books. Ready? Here's the low, and here is, watch this. You're gonna tell me, you're gonna tell me that buying and selling fucking pressure. You're gonna tell me that that shit just so happens to match the fuck up with consequent encroachment. And if you don't see it that way, here's your fair value gap laying right on top of the halfway point or consequent encroachment of the first percent of fair value gap. Now, roll that film footage back on X when we were trading, right there. I said 24,660 relative equal highs too smooth, or smooth edges to that effect. And I said, watch new week opening gap in here. That's right here on this candlestick. Don't take my word for it. Grab the very tweet or post on X that I said that. Copy the link to it, and then go to TradingView, right click with your mouse button when you're looking at the chart like this, and it'll lay my tweet right down on that candlestick right there, and it will say what I just said. And then the market does something completely fucking random. Something nobody on this spinning rock could have ever known about. They never could have saw it. They never would have had the foresight to be able to say it before it happened. They never would have said it was going to do this very thing, because nobody can time the market. Nobody knows what price is going to do. Nobody can predict the future. Nobody. And my fucking middle name is nobody, because the market goes up and trades right back down to that new week opening gap high and does what? It leaves, takes off. And then we get first percent to fair value gap. It becomes an inversion fair value gap because it's SIBI here. Now remember, I'm down here. I'm calling your attention to 24,660. So let's do some simple deductions here, okay? I'm going to help these guys that don't understand when I post something, it's very specific. It's not ambiguous. It's not both sides of the equation. It's literally me saying 24,660 is going to be tagged. And it's going to start and originate off of new week opening gap high. There's no fucking way you can twist that in any other format. There's no way you can do that. You can't say I'm looking to go short. You're not looking for lower prices, ICT. You clearly said you're looking for 24,660, and you're looking for the new week opening gap high as a kickoff. Yes. Does your chart looks like that? Does it look like that? I didn't even mention the first percent of fair value gap because I'm in there before. You don't need to be down here. You don't need to be here. You don't need to be here. You can be right there and do very, very well. The problem is when you see me teach this way, you may be doing this really, really consistently and doing it well. And then you see, you're trying to tell me that you went long here and you added here and you added here and you added here and you got out. I want to do that. That makes you hard to teach as a student because you're not content with enough. Every little bit of progress that you have needs to be championed in your study journal. You cheerlead yourself. You speak positive things about what you're learning and how empowered you feel by having learned it. And even if you don't see it real time, you want to go into your journal and say, this is what I see in the charts right now. Okay. And then you write it in your journal like you saw it. You are lying to yourself, but in a positive way. You're encouraging yourself. Say it would be no different. Okay. It would be no different if you had your small son or daughter and they were trying to do something in some kind of activity or sport. And you're going to tell them, hey, look, you didn't win today, but you did so good. You're, don't worry, you'll get them next time. How the fuck do you know that you're going to get them next time? You don't. But you love that little child because they're yours and you want to build them up. You don't look at that as a fucking lie, but it is. You're lying. You don't know what the hell's going to happen. The next time could be worse. But you're doing what? You're instilling encouragement. You're nurturing that child who you love. Well, guess what? Until you are a fucking ass kicking fucking one man army, you're a child as a trader. And they have to be nurtured. They have to be guarded from these evil pieces of shit on the internet that don't do anything but work at 7 to fucking 11 or pump fucking gas. They got opinions about everybody else. When you're small and you're insecure about what you may or may not know about trading, you're easily influenced by the opinions of other people. Even if you know deep in your heart that they're probably bullshit, you are hurt by them, by the things they say. That's why I tell you, listen, it's your choice. You can listen to other people's opinion about me, listen to it for a little while, and then watch what I'm doing. And then see which one holds the weight. Okay. Hold your hands out. Shit in one hand and wish in the other. See which one fills up first. That's the way you weigh this